Hello and welcome back to the Money Control live stream. You are watching Markets with Santo and CJ. Well, the bulls are hanging by a thread, but they are still hanging and they are still trying very, very hard to stay in the green and ensure that the market does not end in the red for the 7th consecutive day.
They might just get away today, but again, tomorrow will be another day. I don't think they are going to win this one in a hurry.
I think this small victory, Santo, this is what this market is looking for. Small victories at this point of time. I mean, if you look at some of the gainers who are pulling the market higher is the bank stocks and auto stocks that are leading the gainers right now. Whereas if you look at the IT and FMCG space, they are the ones that are on the bear counter right now. They are the ones who have been heavy laggards in the benchmark indices. Plus, there is some weakness that we have seen in the European markets also, which opened in the afternoon, and the US stocks futures. Although US stock futures have staged a little bit of a recovery, and probably that is also feeding into the positive sentiment that we can see on the Wall Street right now. But yes, it remains anybody's game at this point of time. But my money will still be on the bulls.
Well, CJ, you know, the big issue right now here is that there are just too many headwinds for the market to grapple with. So while you might just see the occasional pullback, you know, the medium-term picture is quite clear. It looks like the bull market has ended for now. And while we may still not have crossed that 20%,
my friend,
20% threshold, there are all indications that, you know, that is.
My friend, an Indian company conglomerate has just gone out and splurged $10 billion to buy cement assets from a foreign multinational company. If that is not sign of a bull market being very much alive, you may go by price corrections, right? But there is also sentiment at this point of time. I don't think corporate India at this point of time is reflecting the sentiment that we are in a bear market.
And to tell us more about that deal wherein the Adani Group is buying out Holcim's stakes in ACC and Ambuja Cements, we are now joined by Ashwin Mohan of Money Control.
Yeah, but before that, before we get Ashwin, you know, Santo, let's quickly dive into some of the stocks that we have on our list. And starting off with Aditya Birla Sun Life AMC. Well, after the debacle that was Axis Mutual Fund recently, it seems another report has come out about front running at a mutual fund, and this time the mutual fund at the center of all of the storm is Aditya Birla Sun Life AMC, as well as his parent Aditya Birla Capital. Now, Morning Context came out with a report earlier today wherein they have accessed a whistleblower letter, which alleges that apparently there have been corporate governance issues at the AMC, and that resulted in the stock sinking as much as 6 to 7% at one point of time. Now, the whistleblower is alleging that there were front running happening, something that we saw at Access, allegations that were put up on Access Mutual Fund, plus some sort of corruption, and a lot of those allegations, although nothing have been proved, and Money Control could not independently verify any of these allegations, but the market is clearly reacting to that. And it seems like if these allegations do turn out to be true, corporate governance issues are something that, you know, investors take very seriously, be it the newcomers or be it the old timers, right? So that could possibly pull down valuations of Aditya Birla AMC, and I would not be betting on the stock at this point of time.
Well, the concerns may be legitimate, CJ, but also let us bear in mind at this point that, you know, the charges are yet to be proved. Market sentiment being what it is right now, you know, there is a tendency to, you know, immediately believe anything negative that's said right now. So I don't want to, you know, comment on the veracity of the story right now, but it's very clear that the bearish sentiment in the market is leading to a quick knee-jerk reaction. We have seen that both in the case of Aditya Birla Capital as well as Aditya Birla AMC. Now, in the case of, you know, AMC, the stock has been a underperformer for quite some time now. The thing that can be said in defense of the stock is that, you know, valuations are reasonable, although the market concerns seem to be over the fact that Aditya Birla, many schemes have not been doing well. You know, at one point it used to be a very dominant player, but it has lost market share.
I told you, Santo, AMCs are not the place to be in this market.
But that's strange, CJ. See, if you're bullish on the capital market and you see that people are putting money into mutual funds month after month, right? It is only natural that at some point these companies will reap the benefits of that.
But they are putting more money directly into the market. So, yeah, I mean, it is something that probably we will have to wait for more clarity. But for me, AMC is, despite, I mean, if you keep these corporate governance issues aside, it's not the place to be in this market.
Well, we were talking about the major development of the day, which is that Adani Group will be buying out wholesome stake in ACC and Ambuja. And now to tell us more about the deal, we are joined by Ashwin Mohan, the M&A editor of Money Control.
You have a friend on the show, Santo?
Yes, I have a friend on the show. Ashwin, hi. Good to have you with us here.
Well, hi, Ashwin.
Right, hi guys. Clearly one of the biggest deals in the history of India Inc., the biggest buyout by the Adani Group, and mind you, it's also the largest ever M&A acquisition in the infrastructure and road space. $10.5 billion, but the big question is, how is the Adani Group going to fund it?
Exactly.
As far as we understand, they've got funding from 3 banks, and there is a portion of equity financing that will be done by the family. How are they going to do that? That's something that wasn't really elaborated or fleshed out in the official announcement. But the reason why this deal has created a big splash in the market is that when do you find an M&A deal which straight away makes the acquirer the number 2 player in the sector? Straight away with one swoop, Adani gets 70 million tons, and of course Ultratech is the market leader with 120 million tons. Shortly behind Adani Group you have the likes of Dalmia, you have the likes of Shree Cement. Maybe that's the reason why you saw many of the incumbent cement player stocks feel the pressure in trade today. Because of course it is going to hit their market share. More importantly, it will be interesting to see what the Adani strategy will be going ahead in terms of production. Will there be an impact on price?
I think it seems like we are facing a technical issue. We'll get back to Ashwin, but let's get back to our stocks in the meantime, and we'll get the technical issue sorted.
Well, Escorts is the second stock on our.
Oh, Escorts again, Santo.
Yes.
This is like your own baby. It seems like to me Escorts has become your own baby.
No. See, the stock has been an underperformer of late because that was partly due to technical reasons. You had the open offer. Many traders bought the shares purely for arbitrage reasons, and after the open offer ended, the shares that were not accepted were returned, those got dumped, and which is why you saw a huge price correction there. But overall the tractor story seems quite good at this point. You have an earlier than expected monsoons. Your crop prices are quite high at this point in time given various factors. Also, while there has been a year-on-year decline, tractor sales have been quite volatile during the year, but indications are that April this fiscal has started off on a good note, and the management is optimistic about roughly a 20% increase in tractor volumes overall industry wide. Besides this, Escorts is also doing decently in its other segments such as construction equipment and railway equipment divisions. Both are also doing well at this point in time, and considering the recent correction, I think this stock makes sense in a market where sentiment is quite bearish and investors are looking for companies with decent earnings visibility.
Santo, the thing is ki with tractors, right? 2020 was a great story for Escorts, right? Because at that point of time, not only was volume growth strong, but it was also getting a lot of market share from the industry leader, which is Mahindra & Mahindra. What I would want to see in FY23, not only the volume recovery, but can it also again go back and win some of the market share that it was steadily pricing away from M&M. If that happens, then possibly there is a case for re-rating for Escorts, or else it will probably be performing in line with maybe M&M and other industry peers. That said, talking about stories, this stock is a story in making and probably a multi-year story.
One quick point, CJ, before you move on to that story. See, the JV with Kubota, that is what has changed for Escorts of late. So that analysts are optimistic that it will help them slowly gain market share over time.
Right.
Yeah, so we are again joined by Ashwin.
Ashwin, can you hear us?
Yes.
Yeah,
Great.
Ashwin, so how does this deal change the overall dynamics of the industry? You did say that at this point the details are a little sketchy, but what's the general feel in the industry? What are they saying about this deal?
Well, the general feel in the industry is that people are expecting disruption, because keep in mind that Adani is not somebody happy being a number 2 or number 3 player. It usually targets the leadership position whichever sector it is in. So the first feedback that I'm getting from the the M&A network and the cement industry is that don't rule out more consolidation going ahead, because Adani would definitely want to reduce the gap between it and the market leader, that's UltraTech, 70 million tons capacity versus 120 million tons capacity. So keep an eye out on all those small and mid-cap cement stocks. Who knows, some of them might be up for grabs in the days ahead. Also pricing will be very important going ahead. Whether Adani will, sort of really put the, go ahead and really, aggressively ramp up production, which might have an impact on pricing. That's something that the Dealers Association and other players are looking out for. But at the end of the day, it is going to be very important to see whether they stop at this deal or they go ahead and they swallow a few more assets going ahead. UltraTech also, remember, mind you, it has the curse of the Competition Commission of India.
Right.
Because it can't really acquire more than 120 million tons per annum without falling foul of the anti-monopoly watchdog. So that's the problem with UltraTech.
Ashwin, do you expect the cement space to ultimately probably end up much in the way the telecom space has ended up? We currently have about 3 major players, out of which actually 2 are major and 1 is sort of lagging behind. But could the same thing happen with the cement industry, given the consolidation that the sector has anyway gone through over the past 10-15 years? Is that a possibility going ahead, that we could have a very oligopolistic three company industry?
Very interesting point made, but not in the near future, because if you look at the pecking order right now, it's UltraTech, number 1. Adani, once this deal gets concluded, the open offer gets concluded, number 2. And then, like I mentioned earlier, you have the likes of Shree Cement, Dalmia Cement, and a few other players as well, including, of course, JSW. It remains to be seen which of these players merge or join hands. But what has always happened is that whenever there is a new and aggressive player who enters a particular sector, it usually triggers a consolidation. But I would bet on Adani buying more assets to reduce the gap between it and UltraTech, rather than there being any other consolidation between the other players. So that's how I look at this situation going ahead, guys. Also, one needs to keep in mind that why did Holcim exit? Imagine Holcim has exited several markets, Brazil as well as India. It's the world's largest cement player. And one thing that we need to keep a lookout for going ahead, especially in India, it's the buzzword in cement circles all over, sustainability. Because at the end of the day, Holcim expects its valuation to go up as and when it starts depending less and less on carbon intensive industries. It's moving to more environmental conscious and environmental friendly solutions and building materials. So that is also an angle that players like Adani, which has now entered the cement sector, and other cement players will have to look at going ahead. How will they sort of balance their M&A plans, plus at the same time also be ESG friendly? It's become a big deal globally. Maybe it will take some more time for corporate players in India also to warm up to it, the manner in which Holcim has seriously warmed up to it.
One last question, Ashwin, before we let you go. Now, if assuming the Adani Group gets the entire 26% through the open offer, that would take its stake in Ambuja Cements to about 89%. Are you hearing any chatter about probably Adani Group wanting to delist ACC and Ambuja Cements? The other alternative would be to,
the rules and regulations,
The other option would be to, kind of sell down your stake and bring it down to 75%. But there's also a possibility that they might want to delist it. Is this being talked about in the market circles?
No, fair point, Santo. As of now, the early indications that we are picking up from the Adani Group is that there doesn't seem to be any intention going ahead, to delist either ACC or Ambuja. Also, let's not forget that in the past, both ACC and Ambuja have been merger candidates. And in the past, because of regulatory issues and tax issues, both the companies decided that the merger was not possible. So I would bet more on a possible merger of ACC and Ambuja going ahead rather than a delisting. That's something that has not been flat out denied by the Adani Group, but looks like a delisting is not on the cards, guys.
Well, thank you so much, Ashwin, for joining us and sharing those insights with our viewers.
Well, this is a one story, Santo, that will keep on developing as we get through the months. I was listening into the Holcim's conference call earlier today, and they are suggesting that they are pretty confident that over the next 2 to 3 months they will be able to conclude this deal. Although there was some doubt whether the Competition Commission will allow them that much leeway in terms of approving the deal, but it seems that both the parties are fairly confident that the deal will go through. Talking about the Adani deal, actually, this deal has not only spurred action in the cement space, but it seems that it has lit up the entire infrastructure space. I mean, you look at a stock like IRB Infra today, stock was surging in trade higher by almost 4 to 5%, and it seems the overall outlook towards infra and the comments that Mr. Gautam Adani made yesterday while, in the press statement, that goes to show that now investors are again warming up to the entire infrastructure story, which seemed to have gone into the back burner because of what else was happening in the global context. Now, IRB is one company which has definitely benefited from the low interest rate environment and the easy capital that was available in India as well as globally. It has been able to raise a lot of capital to pare down its debt considerably over the past 2 years, and that has left the company in a good spot in terms of bidding for more contracts going ahead from the National Highway Authority of India. It is very, very much likely that NHAI will come up with higher number of road orders going ahead in FY23, given the sort of targets that have been placed in the budget. So IRB Infra and probably other road construction companies could be a very smart way to play the infrastructure story going ahead over the next 2 to 3 years. And I am starting to look into the space very, very eagerly.
Well, two things that make me a little cautious about IRB. One is that the earnings volatility, which again can't be avoided really.
Santo, IRB is up 10%, upper circuit today.
Well, you set too much store by what happens on a given day. Well, I'm talking about, how the stock will do over a period of time.
Okay.
So one is the volatile nature of the earnings, and secondly, all infrastructure stocks at this point in time are a play on the government's commitment to capex, right? Now, when it had made the announcement in the budget, the situation was very different from what it is right now. Quite a lot has changed. So, I would be a little cautious at this point, given that should crude prices stay where they are, right, and government's finances are under pressure, it would be forced to cut back on some areas, and I think infrastructure would be one of that. Well, moving on to the next stock, Apollo Tyres. The company announced its fourth quarter earnings yesterday, and as has been the case with the other two major tire companies also, margins under pressure and profit also lower than what market was expecting. Now, rising crude prices is one of the main reasons why in general tire stocks have been doing well. Besides, also the recovery in the auto sector is a bit nascent at this point in time, and according to analysts tracking the stock, the full impact of the increase in crude prices will start kicking in only from the first quarter. So you can expect more margin pressure there. IIFL is among the brokerages which has actually trimmed estimates current fiscal earnings for Apollo Tyres by close to about 20%, while it has maintained its positive outlook on the stock.
That brokerage name is always a tongue twister. I don't fault you, Santo, but it is no way possible that you can be positive on Escorts and not be positive on Apollo Tyres, right? Apollo Tyres, if you're a believer that the auto cycle is turning for the good, that after 4 years or almost 4 years of slowdown and being affected by whatnot, higher input costs, semiconductor shortages, low demand, if the cycle is turning positive, then Apollo Tyres is a no-brainer, right? We are already seeing signs that the auto volume recovery is happening. If you look at the month-on-month recovery in sales from March to April, there were good signs that some sort of volume is coming back. If you talk to dealers, they are suggesting that inventory days are going down. That means there is good amount of demand out there. The only challenge that remains is whether auto companies can meet this demand because of semiconductor shortages. Now, if you look at some of the commentary that has come in from automobile companies, that crisis is also steadily easing, and therefore as production comes back roaring, I feel that tire companies will be an automatic proxy play, because let's remember, you can buy a Tata Motors only for what Tata Motors sells, right? But you can buy an Apollo Tyres for the products it sells to various original equipment manufacturers out there. So this is, at current valuations, the sort of correction that the stock has seen, it is a no-brainer from my point of view for this year at least. And you look at the technical indicators as well, they are just blinking bullishness on every counter.
So no death cross here?
No death cross. In fact, we are probably on the verge of a golden cross here, which is basically when the 50-day moving average moves above the 200-day moving average. And so this stock is a definite favorite for me in my portfolio, at least for 2022.
Point taken.
When another favorite of mine is Bank of Baroda. Yeah, I know that probably it is lower in a lot of investors' pecking order when it comes to banking names, but the lender had a very decent showing in the March quarter, although profits were took a beating in one sense. They were below market estimates because of treasury income that they lost due to higher bond yields. But if you look at the asset quality improvement that the bank has shown, it has consistently now improved its asset quality on a sequential basis. It is basically now indicating that credit costs are going to be largely limited around 1.5%, and that could boost its return on equity because you have to put lesser capital aside for provision and stuff, and probably you can utilize that capital to go on lend, and that could overall complement your businesses. Secondly, if you look at the way Bank of Baroda is turning around this loan book, it's focusing more on retail. Of course, it got its fingers burned in the previous credit growth cycle wherein it was heavily lending to corporates and into infrastructure projects, and we all know rest is history, right? But now, this time around, because of the higher retail focus, analysts are convinced that the bank faces lower risk in case there is a negative turn when it comes to the credit cycle. And even if you look at it from the argument could be that bond yields are rising, so therefore pressure on the net profit could continue for a few more quarters. But the management's commentary is that the losses on the treasury income will be largely limited in FY23, probably to the extent that they saw in FY22.
Well, short point here, when you're playing the PSU space, why not go for the biggest of them all? Clearly, and if you're looking for valuation comfort, then which
because low base means better returns. Santo, higher risk, higher rewards.
Well,
anyway, that said, I think I'm missing something.
Well, it's hard to miss that. LIC shares will list on the bourses.
Oh yeah,
on May 17th. Now, there's another interesting thing about May 17th. It also happened to be the first time the Indian stock market ever crashed to the lower end of the circuit filter, and this was about 18 years back.
Wow.
May 2004. Wow. Well, anyway,
stock market gyan from
Santo. Anyway, that apart, according to the grey market, if
you one second, is this sort of a bad omen for LIC?
Well, I would see as a contra, but that apart, even if forget the significance of May 17th, right. Even otherwise right now, if you were to go by the grey market premium of LIC, right now it's in the negative.
Absolutely.
So this means that in all probability the shares could probably list at a discount, and that has more to do with the overall negative sentiment in the market rather than the fundamentals of LIC.
Well, I will argue that probably it has a little bit to do with the fundamentals, given that the analysts have been talking about growth concerns, they have been talking about market share loss, and therefore probably given that it's a life insurance sector, a largely boring sector when it comes to growth prospects, and therefore maybe it's not getting the premium which you might think it deserves.
Well, had this been a bull market, people would have, given money hand over fist. It lot has to do with...
People did. Retail investors, policy holders, you talk about foreign investors, they all jumped. Some came late, some came early, but they all came at the end.
No, I'm talking about the price, because when initially the LIC IPO was scheduled to hit the market, at that time people were talking about a price of, about 1500 odd. Now that's come down even at, 945. There is a lot of doubt. Now, it's very likely that shares may list at a discount, but it doesn't make sense to sell out at a panic. This is going to be a very long-term story, and given that valuations are reasonable, probably one should just about hang in there.
Yeah, that said, tomorrow's trading will definitely be all about LIC, because LIC will be the headline maker in tomorrow's newspaper. But apart from LIC, don't forget there are also other events in the market. You have Bharti Airtel and Indian Oil coming out with their earnings, along with DLF, which is going to come out with its earnings. DLF earnings will be pretty crucial in order to understand how the Delhi NCR market is behaving, especially in the March quarter, which also was hit by the Omicron wave. So definitely there will be certain cues for real estate investors from there. I have a feeling that if DLF numbers come out to be really good, then it could probably be some sort of a sentiment kicker for the market, given that real estate stocks have taken a beating ever since the RBI has come out and the MPC has come out and raised interest rates. So that will be a crucial earnings to watch out for. Apart from that, you have a few minor economic data out in the US and in the EU, but LIC listing and these three earnings, Bharti Airtel, Indian Oil and DLF, will be the key things that I'll be watching out for.
Well, DLF, yes, it will be crucial, but I doubt if it can really reverse sentiment for the sector as a whole.
Right.
Clearly, given that interest rates are rising, and that does tend to cause some people to defer their purchases. Besides, you look at the real estate prices also at this point, they've become, in many cities, many areas, many pockets, they've become quite unaffordable. So you have high prices and high interest rates, that definitely will be
They
adapted.
have not been that unaffordable, man. Come on, people have made a lot of money investing in the stock market in the past 2
That
years.
is the-
Santos,
but
so
not all those
they
who go to
have
buy a
lot of
home
money.
have
They
the
have the
our
moolah
stock
to go
market
spend.
investors.
Anyway, that said, we are just 5 minutes away from the close of the session, and it looks like, Santo, we are finally going to have a green day. We are finally going to snap that 6-day selling streak on the market. So it's about time for us to let you go back to your trading screens for your closing trades, and we will catch you tomorrow morning at 9 a.m.
Goodbye till then.
And do not forget to post your feedback on the comment section below, and also follow us on the social media links at the bottom of your screen. For rest of your updates, do stay tuned to moneycontrol.com and the Money Control app. See you tomorrow.